Okay, this is timing strategies for Monday, August the 18th. Our latest update. We've missed a few days, but we've done a lot of things that have not been updated for our website as far as our posts and updates, because we're doing some work on our website. And again, this is a client blog update. This is not recommendations to buy or sell anything, take any investments or positions based on this information whatsoever. It's designed to communicate with clients and keep them as best as we can informed on a most current basis of what we're doing in the markets. If you have any questions, client or member of the public, non-client, please feel free to give us a call if you have any questions. So with that, let's get started. Yeah, we've been busy since our last update on the 6th of August. Essentially, in our long short accounts, we're short 45% as of Friday, but we're not short in the S&P. And this is our main frame that we're using for identifying the market as the S&P. But we're not using the S&P funds in the RIDEX long short account. We are now short, and we made some updates. I'll use the Dow because we're in there. We went short 10% on the Dow back on the 11th of August. We went short 15% using the inverse Dow Friday the 15th of August. So we're now a total of short of 15% in the Dow. And if you look at the Qs for our NASDAQ exposure, we went on again 10% in the NASDAQ on the same date, the 11th. And then on Friday we went short another 5% for a total of 15% in the NASDAQ, which brings us up to 30%. So 15 short Dow, 15 short NASDAQ as of the 11th or Friday, and also the IWM, using that for the Russell. We didn't update that here either. Oh yeah, we did. Okay. So we were long 20% from the 22nd of July. We cut that down to only long 10% on the 8th. And we kept that 10% until the 15th, until the 15th or Friday, where we upped that 10% back to 15% short in the Russell. So essentially, literally, we are short 15% Russell, 15% NASDAQ 100, and 15% Dow as of Friday. We are also long using the GDX as a proxy for the precious metals as on the 11th. 7.5% long RIDEX precious metals on August the 11th, and we are also long again 7.5% in the RIDEX oil or energy and energy services for a combined exposure of 15% total. So we're long 7.5 metals, long 7.5% energy as of August the 11th, and then we're also short, like we just said, using the back to the SPY, a total of 45% as of Friday. So we're spread long short in some areas in our long short accounts. In our strictly our long only accounts, without the short hedging mechanism and the exploitation of the volatility on the downside, we're effectively short 7.5, and long 7.5% precious metals, long 7.5% energy as of the 11th. Now I'm still looking, if you look at the XLE, I'm still looking for that $69 price tag to get hit, but now I'm not too sure if I even want it if it gets hit, because it's just been snagglepussing around at that level just above it. So that tells me that too many people are watching that level, and I may not want it if it gets there. If we get too big a close below that, let's go back a little bit. Let's take this trend line all the way back to 2005. That's where that trend line comes in at on the XLE, which is the oil services and also some of the refiners and such. So basically the energy stocks, going all the way back 3 years almost. We're actually more than 3 years. We're right at that trend line. Everybody sees that. It's hanging around at that level for too long. I don't know if I want it. I may just jettison that, because there's a much deeper level coming in. If you look at the GDX, in fact, let's look at the XAU. In fact, forget the XAU. Let's go to the GLD. GLD. Gold, in my opinion, can come all the way down to the $72, $73 price tag using the GLD. If that happens, using the XAU for the proxy on the precious metals fund. We got that yet? $? No, that's Chihuahua. X Well, that's not it either. XAU. Well, no, that's not it either. Come on. Thumbs here on the keyboard. Okay, got it. All right, so on the XAU, again, a lot of people are gold bugs. I'm a closet gold bug, I will tell you, but for different reasons than what you hear from a lot of the mainstream. Basically, what I'm looking at is potentially this XAU chart going all the way back to, again, 2005. We've got good support coming in at that trend line along with the XLE and the energy sectors. We've got some support levels, but again, it's hanging around that trend line, and I'm not too thrilled about it sticking around there for too long. We could get one more stab lower on the XAU to about 128.50, and then it's got to pop back up quick. Otherwise, the trend is just going to keep sagging and nagging lower. With that, I want to bring one last piece of information to the overseas and emerging markets. Here's the EEM, Emerging Markets ETF. We're short in the EEM using the EEV, and also, that's EEX. From back here in our Schwab accounts and our ETF accounts and so forth, we're starting to show a little bit of a profit. Things are looking a little better, but that EEM, in my opinion, is headed to about $30 a share, and I'll just draw that right around here. Where's that at? Right about 31, give or take, about 31 bucks. I see that, and I'll go into it later, just not on this post. That EEM hitting to about 33 to 31. Okay, so 33 to 31. We may see that EEM. I'm trying to exploit the downside in the emerging markets. Everybody was gaga over emerging markets. But the problem is we're getting this nagging jerk snag type trend where you get 1 day down, 2 days up, and then the next day wipes it all out. Basically, gotcha. So it's very difficult to establish a bigger position, although this is a beautiful trend. Getting short at the end of the day makes it difficult because any one of these bottoms can really cause a real sharp snapback, and we're getting to the point where this EEM, again, is snagging that line of the January lows, and if we go a little deeper, we do have a line that can come in back down here at about the $37 price tag, but in the meantime, we got some support levels within that range that could get us right back above that $40 price tag in the EEM, and then, a profitable trade turns into a break even, and on and on. So, last point I want to bring to your attention is the FXI for China. Same thing there. We got some positions on with the FXP with our Schwab ETF account and stock account. That's working well. But again, it's China. It's a very isolated market. Anything can happen, and that thing can blow up overnight. So I'm very limited in the amount of risk that I want to have in this specific stock. But what I really think is going to be the best winner to the downside or the short side is the EFA. That's Europe, Far East, and Australia. That's more or less the Morgan Stanley Continental Index, the MSCI. That is a combination of most of the overseas major developed markets. A lot more difficult to jerk that market than it is the Chinese market. So we have positions on in the EFU. I like that symbol. EFU from way back here, and we're just holding that, and that's starting to turn very profitable. We're just going to let that one run. If we have to, and overseas flips around, we'll cut off the EEM shorts with the EEV, maintain the EFU shorts, but again, it's very dangerous in this level. There can be a lot of noise. Ultimately, I think the EEM is headed to 37, 33, and then as deep as 31, or give or take around there. So if you have any questions, please feel free to give us a call, and we'll try to update this as much as possible. We will be out of the office for the last week of August, so you will not get any updates from the 21st until the 30th. But we will be managing accounts. We will probably be reducing our position. Longer term, I think we're just going to see noise. Give you a quick rundown. I ultimately thought the market was going to move higher. Now, I'm looking for a potential bounce right in that 126, 126.50 level on the spiders, right around there. and if we get a bounce in there, we may cover some of our shorts, reduce the total short exposure. I was still looking for 1220, but you know, this market is, I don't trust this market at all because of what's going on with the Fed and the Treasury and all the little shenanigans and games they play in the election and Labor Day, and we got a Fed meeting coming up. You know, we could range all the way back down to 122. If that happens, you know, we'll take it day by day. I don't want to make any hard and fast predictions. It's just kind of a day-to-day thing for now, because ultimately we could see what I was looking for is about 137.5 to as much as 148.5 on the spiders. But if it's going to get there like this, it's going to be a real rough ride, and I don't want to be long or short too much any position. Trying to, you know, sweat this kind of noise out. So feel free to give us a call, and we wish you the best. Have a happy Labor Day coming up.